All right, let's dive right in. Today, we're basically putting on our detective hats to solve a classic financial whodunit. It's a mystery that really stumps a lot of people when they're starting a business or just learning about accounting. And we're going to crack the case together step by step.
So here's the central mystery. You look at your own records, right? Your company's books, and you see one number. Then you get that official statement from the bank, and you see a completely different number. It's confusing, it can be a little scary, and honestly, it happens all the time. So what on earth is going on here?
You can think of it like conflicting evidence from two different witnesses. To get to the truth, we have to investigate. For our case today, we're going to follow the money trail for a made-up company we'll call Sunrise Lighting. We'll see exactly how this mismatch happens, and more importantly, how you can solve it.
Okay, so before any good detective can crack a case, you have to understand the language, right? You gotta know the lingo. For us, that means getting a handle on a couple of key accounting terms. These are going to be the tools we use to uncover the facts.
First up is something called a journal entry. This is literally the foundation of all accounting. Every single time money moves, whether it's coming in or going out, it gets recorded as a journal entry. Think of it like a fingerprint left behind by a transaction. Every clue in our entire investigation starts right here.
Now let's demystify two words that trip people up all the time: debits and credits. When we're just talking about a bank account, which is an asset, it's actually super simple. A debit means money in. It increases your balance. A credit means money out. It decreases your balance. That's really it. Money in, money out. A perfectly balanced system.
So now that we've got our basic tools, let's see them in action. We're going to follow the money for Sunrise Lighting and see how their day-to-day business gets recorded using these debits and credits.
Okay, here's our first piece of evidence. A customer comes in and buys a lamp for $120. That's money in to the business. So we debit the bank account for $120 to show that our cash, our asset, went up. And at the same time, we credit the sales account to show where that money came from. See? It's always perfectly balanced.
And here's the other side of that coin. Sunrise Lighting has to pay its rent, $1,000. That's money out. So this time we credit the bank account, showing the cash asset went down. The matching debit, that goes to the rental expense account. The system always stays in balance.
So Sunrise Lighting has been doing a great job, right? They're recording all their transactions, every debit, every credit. But now, it's the end of the month. The bank statement arrives in the mail, and suddenly, the plot thickens. And this, right here, is the heart of our mystery. According to Sunrise Lighting's own records, their bank ledger, they should have $17,970. But the official statement from the bank, it says they have $23,325. That's a difference of more than $5,000. The evidence just doesn't line up. So, who's right?
Well, whenever a detective has a mystery, they round up the usual suspects. In finance, these are the main culprits. You've got omissions. Think of a bank fee you didn't know about. Then you have timing differences. That's a huge one, like a check you wrote that your supplier just hasn't cashed yet. And of course, sometimes it's just plain old human errors. Finding these isn't just about the money, it's about really understanding what's going on.
So, how do we sift through all these suspects to find the real story, the true amount of cash? We use our ultimate detective tool, the bank reconciliation. This is the procedure that lets us finally crack the case.
The whole process can be broken down into 4 pretty clear steps. First, you update your own books with stuff the bank already knows, like maybe a direct debit payment you forgot about. Then, you grab the bank statement and start with their closing balance. After that, you adjust for all those timing things. Add money you know is coming in but hasn't shown up yet, and subtract money that hasn't gone out yet. And last, you fix any errors.
Okay, let's actually do this for Sunrise Lighting. We start with the bank's number, $23,325. We add almost $11,000 in deposits that just haven't cleared the bank yet. We also add back $625 because the bank charged them for something by mistake. Then we have to subtract over $10 grand in checks they wrote that haven't been cashed yet and another big $10,000 payment that's delayed. And just like that, things start to make sense.
And there it is. The true reconciled balance is $14,775. This is the real amount of cash that Sunrise Lighting actually has. It now matches their own books. The mystery is solved.
So we found the right number. Case closed, right? Well, yeah. But the reason we do this goes way beyond just making the numbers match up. There's a much bigger point here.
Here's the most important part. A bank reconciliation is a powerful tool for control. It helps you spot mistakes, maybe even detect fraud, and it lets you manage your cash flow way more effectively. It's not just about correcting the past, it's about having a crystal clear picture of your money so you can make smarter decisions for the future.
By learning how to investigate these kinds of differences, you've basically gained a new skill. You can now look at your own finances, find the clues, and figure out the real story. So the only question left is, what is your money really telling you?